And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome. The market forecast for Monday, September the 26th. My name is John Hoagland. Thanks for trusting me with your time. As always, our focus here is going to be on context, risk management, and patience. I hope you had a nice weekend. Hope you got rested up and ready for another exciting and challenging week this week. It's the end of the quarter this week. By next Monday, we'll be talking about October. Halloween, my goodness, how did this happen? It's already getting a lot darker earlier and staying darker later in the morning. Certainly noticeable, well, that's just where we are. As far as economic numbers today and this week, pretty quiet day in economic numbers today. There's a couple of talking Feds. As far as economic numbers for the rest of the week, most of them are going to pale to what we had last week with the FOMC numbers coming out. We do have some talking Feds. Tuesday, we have Powell speaking. The home sales information this week will give us a good look at what happened in home sales in August. We've got durable goods on Tuesday, consumer confidence on Tuesday. Wednesday, of course, we have the EIA petroleum status report. Thursday is probably going to hold our most important number, which is going to be the final GDP, which may wrap up some numbers from previous releases this year. As far as stocks are concerned, looking to continue lower this morning as investors continue to fear recession as inflation tightens its icy cap. Is talking about inflation. We had Fed Chair Powell talking about is the economy in recession or isn't it? At this point, I don't see what the real difference is. We know that that things aren't going all that well. So we're, of course, a lot of indecision and uncertainty out there. U.S. dollar continues to surge higher at 20-year highs as the pound gets well pounded, and the euro also getting pounded. Talk of the Bank of England and a surprise rate hike. Lots of speculation as to whether that's going to happen. So if you're trading the pound, you're trading the euro, you're trading anything related to that, and you want to make sure and protect yourself with some at least catastrophic stops. That was hard to say this morning. And just make sure that you're well aware of that. Crude prices continue lower on economic fears continuing to erode demand for crude oil. We've got, crude moving steadily lower in futures. Didn't see much of a change at the pump this week, though. I did a little bit of driving and, had to pay a considerable amount for that gasoline. So the VIX is up about 7 or 8% this morning. 32.27, back above 32 now. We've got the dollar index screaming higher, a full point off its high from the overnight, but currently right about 113.45. The yield on the 10-year continues to creep higher at 3.78. All right. Make sure that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. We do ask that you subscribe to our YouTube channel so you get notifications when we do go live. Today things are back to normal here at Top Step. We're going to be having group coaching today at 1 p.m. Central. I look forward to seeing any and all of you there. I'm looking forward to having a good session And we've got lots more content and educational opportunities coming up for you very shortly. So we got to be ready for the session today. Got to be ready for today. Let's see what we got here. We got Dimitar. Welcome. Good to see you, Dimitar. You're first in the room. You win the prize. The Rooster, JST Wave, Tachyon, Caprice. Good morning, Doc Kevin. Orion, good morning. Shaw, Patrick, Naztic, good morning. Marcelo, Terry, Scott Saw, and he conquered. Dead letter opener, good morning. DA. I wish that was true. If likes equaled profits, I'd be hitting the like button all day long. That's for sure. But appreciate that, though. We do appreciate the likes. If you like what you see, make sure you hit it. If you don't, tell me. Jay Hoagland at topstep.com. Khalid, Anissa, good morning. James, Serenity Trader, good morning. Top Step, probably JD there. Hey, JD, good morning. JNR, Zarain, Sarah, good morning. Prayers and love to you as well. 3 Lions Insight. Unicus with his quote for today. Don't worry about failures. Worry about the chances you miss when you don't even try. Unicus, great quote. Reminds me of what I used to tell my dad when we'd play golf. I'd tell him, every putt that you leave short doesn't fall. Make sure you hit it hard enough. Trading research. Dan, Mango Heist. Good looking at the economic calendar. How do we know which event number is an impactful one? Well, it depends on which one you're looking at. Most of them will have like a color system or like a star system. The more stars or the closer to red the color is, typically the more impactful the number's going to be. Good morning, Vince. Glitter Sandwich, Brody, James, Digital, Mac, Columbus, and Joel MB. It's good to see everybody. We're going to get into the charts here. I think I've taken care of all the business. Don't forget we do have Make Hogue Money tomorrow. I think we actually made some money this week. Last week, I should say. It was a good week for Make Hogue Money. Thank you all very much. And here's the link to get the link to Make Hogue Money. The first link I put in is, of course, for group coaching today, back to normal for this week. And then Make Hogue Money is the second. That's going to be tomorrow. We do it in a Zoom meeting. So if you take that link, you can get into our Zoom meeting and be part of the action, be part of the voting for the trades that we take. And if you want, you can just watch it on YouTube. I do try and pay attention to the chat in both to see what people are saying about the trades. But if you want to really vote, come into our Zoom meeting. Zoom meeting. Seems everything's on Zoom meetings these days. Kind of miss the office. Kind of miss getting out and going downtown and then I don't. It saves me 2 hours a day. But it does take away from some of my reading time. I used to read and listen to music and do crosswords or take a nap on the train. But I used to get some reading done on the train, and I miss having that time. All right. Let's take a look at the charts, starting with the daily in the E-mini S&Ps. What are you going to say about what's going on here? There's only so much we can say. We see volume increasing as price continues to push lower. You can see that right here. We got volume increasing as prices move lower. We had a pretty good increase in open interest on Friday as well, an additional 35,000. So when we think about the auction process, we have the auction pushing lower, one time framing basically, meaning since here we've got lower highs and lower lows, volume has been increasing. I believe overall open interest has been increasing in the S&Ps since rollover ended. Yes, this will be the fourth straight day, Tuesday, Wednesday, Thursday, and Friday. Monday, Tuesday, Wednesday, Thursday. Tuesday, Wednesday, Thursday, we had increasing open interest. Monday was the day when the September really expired, and they took all the open interest and settled it in cash. So it's the fourth day, Friday, of increasing open interest on pushing this market to the downside. The auction, ladies and gentlemen, is looking healthy to the downside. Do not try and seek a bottom. The bottom is going to present itself when it does. It will do it in its own time. I don't think we're going to zero, of course. I said that once, and then crude oil went negative. But I don't think we're going to zero, of course. All of this will settle out. What are we looking for? Are we looking for any good news this week? I mean, we're going to have the talking Feds. They're probably going to be talking pretty hawkish. We do have GDP information on Thursday. Do we have any bad news? Typically with the S&Ps, with the equities, when there is no bad news, they tend to have the grind to the upside. Unfortunately, it seems the grind is now to the downside for the time being. We've got our weekly kickoff low down here at 3,600, a big fat round number, very close to the 25% off the all-time high on the continuation chart. We're a lot lower than that in the Nasdaq and not near that in the Dow, but just feel like it's an important number. We've got our swing low from back here that also might be an important level for us to be paying attention to, and that's 36.57 on the December chart. 36.57. We're getting a little bit close to it. Our low last week was 36.60, so within about 3 points of it last week. What are we looking at today? We are inside regular trading hours in our extended trading hours last night. Inside means we never extended outside of Friday's regular trading hour range. We don't really have any overnight inventory. We don't really have any gaps. We don't really have any reason to believe that there's an urgency to get involved in this market very early in this session today. Yes, we left the gap from Thursday to Friday. We've got naked points of control higher. We've got lots of kind of weaker structure. We've got a naked point of control up here near our weekly kickoff high. But it's just in the short time frame here, this market is in range, in balance, in value. And I'm going to suggest trying to stay patient this morning. Just try and stay cool. There's something is going to, of course, happen. I'm resolving myself to I'm going to miss a few trades this week. So I'm going to be looking for opportunities that come to me instead of going to look for opportunities. If this market continues to be a little bit volatile, that tells me I need to slow down instead of speeding up. So there's only so much I can say about the E-mini S&Ps today, especially in the situation they are in the day time frame, because we are not going to be opening near any inflection levels. We got weekly kickoff down here. Last week's low is here, but we're pretty far from that. We're in range, in value. Can it be true that there was no change in the perception of value of the S&Ps over the weekend? It is true, because that is what the market is telling us. Wait for the market to offer you a cheap situation, a cheap opportunity. That's all I'm looking for today. I have no idea where the market's going to go. I'm just looking for opportunities that offer little risk. And right now, in the middle of this range, I don't see any of those cheap opportunities. So I'm going to be patient. Maybe the overnight high, maybe the overnight low, maybe the high from Friday, maybe last week's low. Maybe there's opportunities there, but right where we are now, not seeing it. Not seeing that there's anything that's that important for me to try and get into this market. Here's crude oil, which may be in a little bit of a different situation here. Obviously, lower highs, lower lows. The longer time frame, we do see that this market is continuing to push to the downside. Friday's breakout, okay, on higher volume, and 26,000 extra open interest. Well, Friday right here. that's encouraging. That's saying that money came into the short side. Volume, money, momentum, everything kind of came into the short side here on Friday. Not that there hasn't been already. Long time frame structure is lower. This market might be getting a little bit sensitive to any good news, but where are we going to get good news? I don't mean to sound cynical. Just think it's going to take a lot of good news to try and to make any major changes in this market. Here's where we were range bound. We broke out Thursday night, Sunday morning, Friday morning. We ranged here. We added a whole bunch of open interest. Not only does it look like we lost longs, we added some. Lost shorts, we added some longs. This B shape is indicative of long liquidation. So we lost some longs, gained some longs with that increase in open interest. It's kind of confusing, I know. We don't really have any overnight inventory with where we are right now. The market opened here last night. We're kind of back to that level. We're in range in value. Try and stay patient. Look for opportunities as the day goes on. Again, because we are kind of in range and near value. It tells me that the market hasn't had that big a change in the perception of value. I'm going to look for opportunities outside of the current overnight center of the range, if you will. If we were to take this and make this a volume profile from overnight. Okay, here's value high, here's value low, here's point of control, here's point of control. From Friday, here's value high. We haven't really moved all that much, so be much more patient, I think, today and look for better trade locations as the day goes on. The bigger picture is this market looks like it is primed to continue to the downside, so I'll be looking for opportunities to sell strength unless it doesn't work anymore. I'm very, kind of concerned about us coming back up and checking to this point of control and taking care of this gap. But we've got to get there first. Nasdaq. All right. So here's 30% in the Nasdaq, 30% off the all-time high. 35%. This doesn't seem right, but I'm gonna double check these numbers. Volume higher, open interest. We only added 300 in open interest on Friday in the Nasdaq, where we had a big jump in the S&Ps, not so much in the Nasdaq. Daily chart still is healthy to the downside. We've been 4 days, one time framing to the downside while adding open interest. Same situation here as in the S&Ps. We don't really have any overnight inventory. Settlement is right here, 11,376.75. We haven't really moved all that much. We're still kind of in the perception that value for the Nasdaq hasn't changed much. Be patient. Look for opportunities as the day goes on. There's nothing cheap about any of the opportunities here because we're looking at risk to the overnight high or risk to the overnight low or risk to Friday's high or risk to Friday's low. Anything outside of that is just crazy risk. So try and stay patient. There's going to be opportunities this week. My goal isn't to try and kill it every day. I just want to be profitable at the end of the week. So I got to be able to trade for tomorrow. No major blowups. And I'm going to try and stay patient. I know I'm going to miss a few trades. And I'm okay with that. What I'm looking for are the ones that come to me, not looking for trades. Okay. Let's take a quick look at gold now. Gold, maybe some opportunities for us. The breakout to the downside from this area of balance really opened up a lot of space down below for this market. I'd much prefer that I didn't see price go this low. But I don't get to choose that, do I? We added 1,700 in open interest on this push to the downside. Volume was just okay. It wasn't tremendous. But we do see the downside structure still remains intact. Lower highs, lower lows on the daily chart, weekly chart, all of that is still continuing to look to the weak side for our hero gold here. It's kind of surprising with equities turning lower. Where is money going? Where is the money going? Not going into bonds. Bitcoin? I don't know. Cash. It's going to cash. It's going to be a lot of money out there when things even out. So here's the 30-minute chart. So here's that area of balance we were looking at, warning, saying, hey, if we break out and accept, look out below or above. Well, here we are. We broke out. We're looking out below. We've got price. What are we doing here today? No real overnight inventory. Back in range, back in value. What are these markets doing? They're just looking for information. They're looking for something. But there's very little change in the perception of value of an ounce of gold now today, so far this morning as well. We're in range, we're in value. Maybe we'll see some opportunity up near Friday's high, up near the extreme of the area of balance that we just broke out below. Got to try and stay patient. Yeah. Pierre says it's in the USD. Mike, gold indicating real stress in market fabric. My goodness. Gold's inflation hedge badge has been revoked. You are no longer an inflation hedge. How about it, right? Very, very strange. Just things we don't see usually mean something. And you may be right. Stress in the market fabric. I like that. Well, I don't like it, but it's very well put. Yeah. Hey, Ray, it's under our mattress. Yeah, Vince saying the same thing. Right? All right, let's take a look at the euro, which continues to just get pounded, as well as the pound. Friday's, hang on. Strong dollar continues to pressure euro and the British pound. This breakout down here last week was such a big opportunity. It took the euro right off my back burner and put my eyes back on it. Volume remains strong. Open interest increases. We had good volume on Friday. Added another 1,100 in open interest on Friday, so money is still continuing to come into the short side here. You got to keep your eyes on the Bank of England, ladies and gentlemen. There's a lot of rumors in the wind that they may do a rate hike between meetings. A surprise rate hike randomly could certainly create some issues. So if you're going to be trading the pound, you're going to be trading the euro. Keep your eye on that. Make sure you're protected. Always wear a stop. Always protect yourself. What are we looking at here as far as, okay, we're going to open with a gap. We've closed the gap. We do have just step down, step down, step down. I mean, the structure to the downside is quite strong. There's some weaknesses above, but as long as we can't take out, I think, Friday's high, I think we're going to be looking for opportunities to continue to sell strength here. All right. I don't know if you guys can hear Lacey's on the forbidden couch and she's dreaming right now. She must be barking at a squirrel or something because she's squeaking. 10-year. Look at this move. Look at this move. I mean, boom. It's almost like a straight line. Just amazing to me. Just a straight line. Weekly kickoff low is 112 today, this week. It's just basically kind of based off last week's low. There's little information, and this is a previous weekly kickoff level that did provide opportunity. I had left it on the chart. So let's take a look at what it means. Well, Friday, we pressed down to it and found buyers down there. We did add an additional 25,000 in open interest on Friday. But what was that open interest? Kind of hard to tell. Value was lower, so it would indicate that the open interest we had on Friday was continued sellers, but the market didn't really hold up all that well down against this level. We're still testing that 112. I've got to put this in. I got to put that on here. Hang on, 112. So we looked at it overnight. We looked at it on the overnight on Thursday, 112. So far, it's been showing signs of rejection. It's got higher lows every time we get to it. We don't have a gap anymore here in the daytime frame. So if we accept inside the value after opening outside of it, inside the range and value, we could see a decent move up near yet Friday's high to look for a better opportunity for a short. It's Monday. So here's natural gas. We have the market one shoulder, head, shoulder, finally a good breakout. Thursday, we added 3,200 in continuation. It is now, of course, the November contract. We're still in rollover, which makes things a little bit blurry as far as volume and open interest is concerned. But our eventual terminus for this head and shoulders is right down here to weekly kickoff low, $5.60. Until then, or until there's a major change in market state in the short time frame, I'm looking for opportunities to sell strength, which again seems unnatural coming into fall and winter, but this is what the charts are telling us. Okay, we just opened. We don't have a gap. We seem to right now be rejecting price from Friday, and the last week's low, Friday's low, seems like a good pivotal area to look for opportunities because, again, it should offer us an opportunity to limit risk. So no gap. We close the gap. We seem to be rejecting price or range from Friday. Keep an eye on this, and we'll check this later on the market recap today at 3 o'clock. Yeah, Serenity Trader. My dad's thing was, the market always looks the best at the top and looks the worst at the bottom. It's when everybody gives up and finally the bottom comes in. These are tough times, man. The economy is hurting. A lot of people are hurting. It's scary, but if I've been through 3 major crashes already, and we always seem to come out okay. Just don't check your 401k. That's kind of scary to do that. Yeah, how is it nat gas is approaching lows? My utility bill just raised natural gas. I know. Electricity, it's almost like our bills have doubled. Makes you wonder if they're kind of being dishonest about what's going on with these bills. But okay, in March of 22, let's just take a look here, and I'll show you why our bills are still so high. All right. So here's the daily. Beginning of 21 was $3.80 for a million British thermal units. It's still more than twice that now. This was December, beginning of the year this year. Just about the same. Now, whatever that has to do, of course, it's going to have something to do. Yes, these tough times, we will last. Another one of my dad's wisdoms was tough times don't last, tough people do. So we're going to be tough and we're going to survive all of this and we're going to be better because of it. All right, let's take our deep breath. Let's stay humble, grateful, and creative in our trading today. I got to get a new chair. This thing is very squeaky. You got to get something done with this. But let's get out there and profit today. I'm looking forward to seeing everybody again for group coaching today at 1 p.m. Central. Nothing really on the economic calendar to block us from spending that time together. And I look forward to seeing you there. There's no bad questions. No bad questions. The only bad questions are the ones you don't answer. And if I don't know, I'm going to tell you. Nobody knows everything, trust me. So bring your questions. Bring good questions. They're all good questions. Whether you're new at this or whether you've been at this for a while, if you have questions, bring them on. We'll see if we can answer them. I learned so much from doing these. I hope you do too. So, well, get out there and profit today. I'll at least see you for the recap at 3 o'clock today if I don't see you for group coaching today, again at 1 o'clock. And get out there and trade well today. The opportunity's out there. Let it come to you. Trade well today.